Okay, good morning. We're here with Congresswoman Maxine Waters from the 35th District in California. So happy to have taken the opportunity to meet with you today, Congresswoman. We're here with What's Up Government TV and the office of Congresswoman Maxine Waters, right after a Financial Service Committee meeting with the Chairman, Ben Bernanke.
That's right. Chairman Ben Bernanke presented in our Financial Services Committee today, speaking about regulatory reform. We have to talk with all of the heads of our regulatory agencies and get their input on what must be a substantive regulatory reform bill. This country has experienced a phenomenal meltdown, and taxpayers have spent a lot of money bailing out the bad actors who caused us to be in this situation. And so we've got to have serious reform. And we heard his take on it today.
I think you would call some of the bad actors as classified banks that are too big to fail.
Too big to fail. That's
Too big
right.
to fail.
That's right. That's right. Too big to fail. And increasingly we see consolidation in the financial services community, particularly with the banks. So you literally have just a small number of banks who are controlling all of the mortgages and basically the finances of this country.
Congresswoman, I'm so happy here to be with you because, as you know, I've been following pretty much since March the Financial Service Committee, and I must tell the public through our television show that you have led the march, in particular for minority and
Yes.
small businesses, after the bailout.
Yes.
The bailout, no question, was a part of an economic downturn
That's right.
that has gave the country a cold, but the minority small business community a flu.
Mm-hmm.
And so, one, I'd like to thank you for
You're welcome.
standing up for those small businesses that really need, and in the wake of this bailout, the representation.
Thank you.
With that, I would like to allow the few minutes that we have here for you to, in an introductory phase,
Yes.
explain what has, to the public, what has really been going on
Yes.
in the Financial Service Committee, what you've attempted to do
Yes.
as a body with respect to the bailout.
Well, as you so aptly stated earlier, this country has experienced a serious economic crisis with the meltdown in our economy, created mostly by the subprime lending market. What we had was loan initiations for home mortgages that were basically fraudulent in many cases, but certainly home loans that were targeted oftentimes to minority communities, and many people were taken advantage of. Many folks who got involved with these mortgages simply wanted to live the American dream. They wanted a home. And they had loan initiators who basically said, sign on the dotted line. And they used all kind of exotic products to sign people up. They had something known as Alt-A loans, where you don't do any documentation on the income. And basically that was a kind of product that had been used for the very, very rich who did not want to basically make transparent all of their income, and they didn't want their competition to understand exactly what they were doing, but they certainly had the kind of capital and assets that would allow Alt-A loans to go forward. They took that product and just shoved it down to the poorest communities in order to get a mortgage. You had that, you have the option arms, those adjustable rate mortgages. You had what we call teaser loans, where you pay little or nothing down, but they reset. And when they reset, of course, many people who signed up could not afford them because they reset with margins that were 3 to 4% higher than the interest rates that they had been introduced to when they first signed up. So consequently, we had not only an economy that was not performing and a loss of jobs and less income. You also had simple arrangements where people signed up for loans, got in for very little, didn't understand what resets were all about, the option arms, the adjustable rate mortgages. It was just not understood by many people. And so 6 months later, 1 year later, when those loans reset, and now you had again the market rate plus 3 or 4 percentage rates above that on the reset, people just didn't have the money to pay. And so they ended up in foreclosure. And we saw whole communities in this country devastated by foreclosure. Places like Cleveland, Ohio, and Michigan, and places in California, and Nevada, Arizona, many, many cities and states across this country that experienced these bad loans and foreclosures. And these communities were basically devastated. So we've tried to stabilize the economy, to try and give help to many of the people who got into these bad loans. Unfortunately, in all of that, in order to stabilize the economy and avoid going into a depression, we had to bail out the very people who were responsible for the meltdown. We're talking about your big banks. We're talking about Bank of America. Countrywide was like the poster child for bad loans. Of course, the Wells Fargo, and Citicorp, all of them. They ended up basically about to go under because they literally were the ones who invested in these loans. They were the ones who encouraged the initiation of the loans. At the local level, these mortgage bankers, mortgage brokers, they literally packaged these loans. They were securitized, and nobody knew what was in these bundles. You had a lot of bad loans that would never perform in the packages, in the bundles, along maybe with a few good ones. But Wall Street was greedy. They just thought that they were going to make a lot of money. People made money all up the way because everybody from the person who initiated the loan to the appraisers to everybody that had anything to do with the finalization of a loan were making money. The mortgage brokers were making money, and then they invested in them from Wall Street. So we've got to have serious reform, and we heard his take on it today.